After a mostly lower week last week, grains resume their weather rally, but can they get through chart resistance this time? And will funds keep buying? Meanwhile, cattle take a breather after a strong chart action and cash trade last week.
Live, fortified with an external non-florinous chip. Via Farm Journal Studios, this is AgriTalk. This afternoon, we'll chat with Chip Nellinger from Blue Reef Agri-Marketing. Later, Cary Artac from ArtacAdvisory.com. And directly following the news, Jack Scoville from the Price Futures Group. I'm handsome newsman Davis Michelson. And now, filling in for Chip Flory, say hello to Michelle Rook.
Hey, good afternoon, Davis.
Howdy, how's it going?
Not bad, not bad.
Yeah, it got cloudy here since last time we spoke.
Here too.
Got a little cloudy, but then the sun came back out. We're at 83 degrees and sunny here in Kansas City. But I don't think it's going to last. Yeah.
And we talked this morning about more severe weather and some storms, and it looks like the northwestern Corn Belt is going to get wet again here, and we just we were so dry last year, and now the guys are like, we're so glad to have moisture, and you don't want to complain about it, but they just want to get planted. So.
Well, yeah, and we don't know, we hate to ask, could we please just shut it off for a little bit, because we're not sure when it's going to shut back on, are we?
Yeah, exactly, especially if you look at the extended models, like the 60 and 90 day, you might get a little bit of drying in those times, and would be really thankful for some moisture at that point. So
absolutely, yeah. Generally, how's everything in your world today, Michelle?
Very busy.
Okay.
And yes, very busy trying to do both this and helping out with Ag Day. We're doing the state of the dairy industry this week. That's our focus. So
boy, that Clinton Griffiths is a taskmaster, isn't he? Man, the guy just keeps laying it on.
Hey, he's got a good support staff. Give us a little bit of credit here. Come on.
Yes, he does. Yes, he does. Of which you are a large part. We really appreciate you, by the way, taking the time in Chip's absence. Beloved listeners, Chip is scheduled to be back tomorrow morning. Regarding his absence today, don't worry about it. Don't worry about it. Mind your business. He's fine. He'll be back tomorrow. Yep. But we're really glad to have you, Michelle.
I'm just in for one day, and it was a good day at that on the grain side. Looks like wheat kind of took the leadership role today, so kind of kick us off and talk about the price action today.
Absolutely. The wheat complex surged higher in today's trade, lifting corn and soybeans in its wake. Global production concerns supported a move in July, SRW above the 10-day moving average, and a close well above resistance around 685. USDA reported wheat export inspections of 205,500 metric tons. That's down from the previous week and short of pre-report trade expectations. July HRW wheat futures were 35 cents higher at 696 3/4. July SRW wheat firmed 37 1/2 cents to 688 3/4. July spring wheat closed at 739 1/4, up 27 3/4 cents today. Michelle, I think there are elements of U.S. weather in this move here, but I think traders may be looking more globally at potential weather-related production problems. Ukraine, Russia, these are major suppliers of wheat.
Yeah, there were some downgrades today because of frost that we saw again. And interestingly enough, we're back up into chart resistance on these wheat markets, and we'll see if we can get through them if we have enough weather problems to get us through those chart areas.
Yep. Well, spillover support from wheat urged corn futures higher on the day. Forecasters say the Midwest will be wet for the next 10 days, though ridge building begins in late May, which could begin to reduce rainfall in the plains and western Corn Belt. Futures rallied above key moving averages in today's trade. Next resistance lies at 462 1/4 for the July contract. USDA reported corn export inspections of 1.21 million metric tons during the weekend at May 16. That's up from the previous week and just above the range of pre-report trade guesses. July corn futures today 8 cents higher all told, 460 1/2. September corn gained 8 1/2 cents to 471. December corn futures firmed 7 3/4 to close at 484 1/4. An up day in the corns.
Yeah. July, like you say, back above the 20 and I think 100-day moving averages. We'll see if we can keep going. A lot might depend on the weather forecast and what we get out of crop progress on planting this afternoon.
Well, solid underlying technical support helped soybean futures build on Friday's gains. News that China has heavily favored imports of Brazilian beans this year did little to temper the upward momentum. USDA reported soybean export inspections of 184,000 metric tons, down from the previous week and short of pre-report trade expectations. July soybeans stopped short of a test of resistance at 12.50.5, while initial support now lies at 12.24 3/4. July beans on the day 20 cents higher at 12.48. August beans up 17 3/4 to 12.43. November beans closed at 12.16 3/4. That's up 13 1/2 cents. I'm pulling up my chart here. Last I checked, bean oil and bean meal both put in pretty solidly higher performances today.
Yeah, it was a strong day, and we've seen the July contract. It was the only one last week that had a higher weekly close. You've seen the forward spreads working, and so there's something going on there in July beans. We'll talk about that a little bit later here with Chip.
Very nice. Well, July cotton firmed 14 points to 76.03. On your livestock's underlying cash market fundamentals did a little more than hold cattle futures near unchanged today. June live cattle firmed 42.5, 181.47 1/2. October futures off 12.5 cents to 181.82 1/2. And August feeders $1.37 1/2 lower at 258.47 1/2. And on the snout side, after opening the session higher, lean hogs closed mix. A close above a resistance at 97.75 would indicate building bullish sentiments. June hogs today 42.5 higher, 96.92 1/2. And October hogs up 15, 84.12 1/2. Over to you, Michelle.
All right. Yeah, thanks, Davis. Appreciate it. And we bring in Jack Scoville with Price Futures Group. Well, nice update, Jack, in the grains led by the wheat market. How bad are these global production concerns? Are they enough to get these contracts to get over these chart resistance areas we keep banging our head on?
Well, I think we're getting to a time and a place where that becomes increasingly possible. I've always heard that it really depends on the May weather, the situation over in Russia. And right now we're in May, of course, middle of May, and it's very dry still. So I think there are very legitimate crop losses going on. And although it may not cause a real big decrease in exports right away, it could later on. And so I think the move is justified, and I think eventually we will take out these recent highs here over the probably next several days.
Is wheat going to be able to continue to pull corn and soybeans along, or do they have their own story?
Well, wheat has some other stories going on. There was the Ukrainian drone attack on Russian ports that could hurt the export pace of Russian wheat as well. So that was something else to go on. Corn really doesn't have much of a story, but beans sure do. Basis levels have been very strong down in Brazil because of all these, primarily because of all these sales that have been made to China here. The market needs to source some beans and having trouble getting them out of the producers. So basis levels have been very strong, even with the rally here in futures. And that's helping to support the beans independently of whatever wheat's doing.
All right. Thanks so much, Jack Scoville, Price Futures Group. Well, when we come back, we're going to dig more into today's action with Chip Nellinger, Blue Reef Agri-Marketing. This is AgriTalk. We'll be back after the break.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind.
And welcome back to AgriTalk. I'm Michelle Rook in for Chip Flory. Chip will be back tomorrow, but joining us here with analysis today is Chip Nellinger, Blue Reef Agri-Marketing. Good to have you back, Chip.
Hey, good afternoon, Michelle. Thanks for having me.
Yeah, and I ordered up a higher day in the grains just so you would have something fun to talk about.
Yeah, finally we get to talk about something fun. A lot of green out there today.
Oh, I know it. It feels, or it felt like for so long, and you and I were on together, I think in January, but we were talking about, we needed some sort of story to spark this market and get these funds to cover their shorts and get out of these massive short positions that we had. And we, in essence, are seeing that, aren't we?
Yeah, finally.
Finally.
Took a long time. It was psychologically a hard ride to take, as it just seemed like wheat, every other day was pushing down into a new low and dragging corn lower, and corn would get a little bit of a bullish story going, and wheat would drag corn lower, and it just got frustrating. But now finally, you got some fundamental reasons, and a lot of money flow out there, and the funds seem to be very aggressively in buy mode right now.
Right. And they have really peeled out of a lot of their short position the last couple of weeks in corn and beans, especially, haven't they?
They really have. And, after today's big up day in the beans, I would say they're getting close to being flat beans. The good thing is they usually don't just, they swing from one extreme to the other. So they're likely going to end up building a long position. I don't know how big of a long position, but that's good news. It says we probably have a little more buying, from the funds here in the entire grain sector.
Yeah. I think we can kind of agree, though, that wheat ended up being the price leader here. And a lot of that has been kind of predicated on some of these global production concerns. And last week, I think most the traders thought, hey, we're going to put a little bit of a fork in that market because we did finally have lower weekly closes there. But man, shot back up here today. And how big are these global production concerns? Are they real?
I think they are real. And, I think there's two things at work. Number one, and none of these are going to be like immediate, right? They're going to take some time to kind of sift through the market and figure this out. But India didn't have a very good crop,
No.
and they're likely going to have to import a fair amount of wheat. Usually they're pretty self-sustaining. And then Russia, who's the world's largest exporter of wheat, is in the middle of some production problems. I heard you mention before the break, they've had 4 or 5 different frosts there. And freezes. So that is one issue. And the other is it's very, very dry in a lot of those areas across Russia and even into Ukraine. And so, that is at a critical time frame in their production cycle. If they don't get some rain the next 3 or 4 weeks here, that those estimates are even going to drop further. And so that is the fundamental spark that's kind of driven these funds out of, the wheat market. I don't think they're fully out of it yet, but they're getting closer and closer. And like I said, they're likely going to flip to a net long now. So, how high we can go is going to be dependent upon, the size of the long position the funds want to take in wheat. But I'd say they're in progress on flipping it from a pretty healthy, net short to something on the long side of the ledger.
Yeah, and it's always so hard to get, I would say, accurate information out of the Black Sea, especially Russia region. But I know APK came out this morning, another private firm, saying, hey, these production losses could be 20 to 30% in Ukraine and the Black Sea region because of frost. That's a big loss.
It really is. And, again, you're not going to know immediately, and
True.
Russia's going to lie, just basically, to put it bluntly, until the very last second. They're not going to let on exactly what that wheat crop size is. But the world markets will tell you eventually. The cash market always wins in the end. And so that's what we're going to be watching. I mean, not only is Russia and Ukraine dry, but Europe didn't have the best growing season for their wheat either. And so they're not going to be flush with wheat. And, at the end of the day, that could mean that we get a little better export business on the wheat to the rest of the world. And that'd be a welcome sign, because it does look like we're bouncing back with some better production than a year ago.
Yeah, and Europe's prices have been reflecting that. I mean, if you look at a chart of their wheat market, it has gone straight up, hasn't it?
Yeah, it really has. I think the French wheat market is kind of the bellwether there, and it has really been. It was kind of the first one to lead us, and then finally, it took a little bit, but the Chicago and KC wheat markets kind of took note and got the funds heading for the exits.
Okay, so I'm going to throw some cold water on this by saying, does it matter if we don't have U.S. exports picking up? And there isn't any evidence of that as of yet.
It doesn't matter. And so you could still have a lot of volatility, right? When these funds get out of their shorts and they get long, and they've built the position they want, it's going to take some time. That's the slow part of this. It's not a immediate next week we're just going to wake up and have 200 million extra demand on the wheat. So that will take some time, and there could be some disappointment in the short run that it doesn't pick up, as fast as what the market might want. So you could have a lot of volatility in here. And that demand is going to be something that's longer term, unfortunately, especially in the wheat. It's going to take a while for that demand to be uncovered, into direct U.S. sales.
Right. The other problem that we've been having is we keep hitting our head on chart resistance. You can't get July Chicago or July Kansas City wheat to close above that $7 mark. That's going to be kind of critical here, isn't it?
It is, and that was one reason why we kind of ran into resistance there last week.
Right.
The most of the volume, the fund volume, is in the Chicago market, and so that kind of creates some weird spread discrepancies as well. I mean, by all rights, Kansas City wheat should be way over where the Chicago is. They're within a dime of each other, and that's because of the funds. And so there was some reasons last week why the Chicago wheat kind of stopped just shy of $7. There's a 62% retracement level right there. And I think that you saw a little bit of long profit taking. The people that caught this move on the long side probably said, hey, enough's enough. There's a weekend here. There's a weather market. And there were better rains in the forecast for Russia. And then they kind of took them out, which led to the big rally, overnight and today back in the wheat.
And then you had the Kansas Wheat Tour showing a better crop than last year, too. That didn't help.
Yeah, I think that kind of, gave the bulls a little bit of pause last week that, okay, we got maybe a little better hint of rain in Russia, and this Kansas wheat crop came in with a little better yields than expected. And so that did throw a little cold water on it temporarily. But still, even to your point, with a big day today, we still haven't made a new high in this wheat. And I think you need to do that probably tomorrow or Wednesday, or you might be setting up for, kind of a double top type of a thing, and people, maybe pulling the rug back out from under it. So the money flow is definitely going to drive it, but we do need to get over, last week's highs and push up north of $7 to keep this thing going.
So funds on the Commitment of Traders report in all three classes are still short in that market. And will they keep exiting? Do they have enough, I guess, ammunition to keep exiting and, push this market even higher?
Yeah, I think they will. As of the last Commitment of Traders report, futures only, they were still short around 30,000 contracts a week. Little bit of selling late last week, pretty big buying today. I'd say that they're, getting close to kind of getting out of that. And then again, do they want to get long and how much? They want to get long 20, 30,000, 40,000 contracts of wheat. There's still plenty of firepower to take us well north of 7.
Right. Would corn be up today, or would have corn had this rally had wheat not taken the leadership role, do you think?
I don't think as strong. I don't think it would have been up as much as we were. So we definitely got some spillover strength from the wheat market. It's a mixed bag on the weather. There's still pretty wet forecast out there. I know, around here, kind of north central Illinois, a lot of planting activity over the weekend, and then there were a few showers this morning. And so we're getting caught up, but there's still a lot of area left to plant. I guess here in a half hour or so, we're going to get an update on planting progress. So that'll be big in the market's mind as well, to figure
Absolutely.
out what really is out there.
Yeah, and it's hard to know how much of that we are trading or trying to factor in here to the corn market, and how much of that rally has been short covering by the funds, right?
Yeah, exactly. I thought corn last week, Thursday, Friday, felt a little off to me in the fact that, you had wheat that was kind of strong there earlier in the week. And if we were coming into the weekend and corn just wasn't rallying. So, it kind of either said to me, hey, the forecast is going to change and we're going to get this stuff planted, or we're making more planting progress than maybe what I thought. The corn market seemed like it was a little sluggish to me last week, at a time where you would expect the forecast to have given it a little bit of strength. So, certainly wheat going higher is going to help. And I do think if we are behind, now it does start mattering. The market usually takes a slow approach to planting delays because we can plant so fast anymore.
Right.
But if we are behind, we've got some catching up to do, and the window is really closing fast.
Right. We also got up into chart resistance on corn. We're going to talk about that after the break. Chip Nellinger here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 35 cents higher at 6.96 3/4. July SRW wheat up 37 1/2 cents to 6.88 3/4. July corn futures were 8 cents higher at 4.60 1/2. December corn futures firmed 7 3/4. That's to close at 4.84 1/4. July soybean futures 20 cents higher at 12.48. November beans closed at 12.16 3/4. That's up 13 1/2 cents today. July cotton up 14, 76.03. On your livestocks, June fat cattle firmed 42 1/2 to 181.47 1/2. August feeder futures $1.37 1/2 lower at 258.47 1/2. And June lean hogs today 42 1/2 higher, 96.92 1/2. Get more market news every market day. Visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Our name says it all. AgriTalk. What more do you need to know? Hey, Michelle Rook.
Yes.
Awful clever. A smooth move. When Chip is gone today, Chip Flory, to bring in a whole other Chip. Because usually, it's like, hey, live from a molasses cookie kind of day, because there's no Chip. Well, there's no cookie reference today because we are enriched with an external, non-florinous Chip, thanks to your efforts. So, good work.
That's
good
funny
work.
you mentioned that, because when we were at Commodity Classic, we had Chip Nellinger and Chip Flory on the roundtable for U.S. Farm Report. And so it was kind of funny because it was like Chip 1 and Chip 2. So.
Yeah. Hey, Chip.
So you're Chip 1 today, Chip.
Chip 1. I always tease Chip like he's the smart Chip, though.
We'll get Bill Flory on
smart
next time and
Chip.
see how that goes.
I don't want to give him too big of a head. I don't know if he's listening right now.
Smart Chip. I love that. Okay. Who says you can't have fun on AgriTalk when I'm hosting? I'm the most boring person in America, so this is really a breakout for me.
False, Michelle, false. Yes, let's have some fun.
Oh, funny. Well, I'm going to get back to boring here, and that is talking about, now, I love charts. I know Chip Nellinger loves charts. So let's talk a little bit about chart action on corn. We promised that before the break. Corn, just like wheat last week, kind of kept running up into chart resistance. We'd have these nice opens. We'd get up into resistance and then close lower. And we did that like 4 days in a row. So what do you think? We got above the, 20 and 100-day moving averages today. Can we keep going?
Yeah, I think that's the question. I think this planning progress report here in 25 minutes is going to tell you a lot more to that. We were talking before the break. I do think it's going to start mattering to the market now. It probably hasn't to this point. I think that we closed last week, right, kind of on a do or die area. We were right back on the 50-day moving average. We're back above that now. I think we got to keep it going. And if you got below last week's lows on Friday, probably opens the door up maybe to, something closer to the previous lows back in February, unfortunately. So I think a lot of it story is going to be told once we see this planning progress and obviously what the weather looks like the next week to 10 days.
Yeah, obviously what we get for the forecast is going to play into that. And I was watching that support area on Friday on the charts on corn, just like you were, and that had to hold. It was make or break. So
exactly. And it did so far, which now makes, it kind of actually increases the importance of it now that we rallied from there. If we reverse and fail and then take Friday's lows out, probably not a real good sign technically, and probably opens the door up to another quick 20 plus cents to the downside.
Well, conversely, let's talk just a little bit quick about, have we lost any yield? Can we get to USDA's 181 bushel per acre yield objective or projection if we're planting late?
Well, it makes it that much harder. We've never done that before, right? We've never hit 181. It's probably not impossible, but it raises the bar way up. And I'd say if there's 15% of the crop or 20% of the acres that don't go in until the last week in May or the first few days of June, that probably seals the fate that a 181 isn't in the cards. So I would never say never. I think it's possible, but probably not very likely at this stage. And the later planting gets, the more that becomes an issue. And then do we lose any acres, right? And we might have already lost some acres in the south, the Delta and Mid South area. So are we gonna plant 90 million acres, or is that going to drop going forward?
No doubt. So let's talk about soybeans. We mentioned July soybeans, the only one last week that had a higher weekly close out of the grain complex. You've seen the forward spreads working. Is that concerns about South America's crop, or is that underlying demand? What's going on there?
Yeah, it would tell you that it's maybe a little underlying demand when the bull spreads are working. I don't think there's any shortage of beans out there. I just think that a lot like our corn market here, where U.S. farmers just weren't selling, it's the South American farmer that hasn't been selling their production. And the other thing is, I think it's just money flow. If you look at some of these, like gold's at a new all-time high, copper's at a new
Silver,
all-time
copper.
high.
Yep.
Yeah, silver's been just screaming trying to catch up to gold. I think there's some money flow out there. And so it may just be as easy as, hey, the funds don't want to be short beans anymore. They love being long beans because they get a lot of bang for their buck in a volatile market, and they can make a lot of money in a short amount of time. So at the end of the day, it may be more about money flow, and the funds just want out of their shorts and likely going to build a long in beans, and that's going to take us a little time to do. But the Brazilian farmer and even the Argentine farmer is going to be out there selling this rally with both hands.
Yeah, and their prices are fairly close on soybeans to ours, but China's bought a whole bunch of beans from them, or they did last week. They haven't bought any new crop soybeans from the United States. Is that a concern?
Yeah, that's a huge concern to me. Like you mentioned, this price spread's narrowing. There's some rumors and some talk that China is snooping around for possibly some U.S. beans. But it is a huge concern. If you go back to the USD report a couple Fridays ago, that was my big. I thought it was a gift to
Right, they
even keep.
raised it.
Yeah, a gift to keep new crop bean carry out at 445 million. That was on 250 million bushel increase in demand, and
Right.
I'm not, again, never say never, but I'm not seeing that right now. We may not even hit the number that they have pegged in for old crop, let alone raising it by 250 million bushels next year.
Yeah, and I think the 125 of that was crush and the other half was exports, right?
That's correct. It was about
Right.
half and half. I mean, I can see the crush, but that industry has some issues now with all the cooking oil that we're importing from China, and so there's some issues there with that big crush number. I think it's possible, but we got some we got a big mountain to climb, I think, on the demand side.
Yeah, we did have both meal and oil up today. That was good to see. I still wonder, though, about southern Brazil just because, they have logistics issues down there now, or infrastructure issues, I should say. You can't get stuff out of the port. Soy processors can't process. And Argentina, we haven't even talked about them. Their crop looks like it's kind of shrinking, isn't it?
Yeah, it's going to end up, both of those crops, the Brazil and the Argentine crop, going to end up well under what the early season estimates were. Not a disaster by any stretch. But to your point, and the Argentine crop has been delayed a little bit. They're really slow progress getting that thing harvested. And so, maybe in the short run, there is some end users that are caught a little bit flat-footed and don't have the product that they need, and maybe coming to the table. That might be part of why the spreads are firming up here, and it's good to see. But I don't know if that's enough to take us a dollar or two higher, because they're also right down there when they get it harvested, and when their spring comes, they're going to be plant more acres than ever down in Brazil. So,
Right.
they're just going to be there as this massive behemoth of bean supply going forward, it looks like.
One quick question about Brazil's second crop corn, because I want to have time to talk about cattle. You know, it's turned hot and dry there. When are we going to start trading that? When are we going to start trading that smaller crop?
Yeah, again, I think that there's still some discrepancies, from CONAB and what the USDA says. So, that might be part of it. It seems like it's gotten a little quiet. I would agree with you that that's kind of taken a back seat. You haven't heard a whole lot, but I think you are right that they're in a pretty critical time frame here. It's usually their dry season anyway, and it gets hot. And so, I don't know that that's fully in the market, but if it continues to drop those production estimates by CONAB going forward, next month, I think that's something that will become a little bit bullish, and then corn can kind of stand on its own and maybe get out of the shadow of the wheat market.
All right, let's talk about cattle. What's your take on that market? We had a very strong cash trade last week. We've got futures at a discount to the cash. Looked like a chart breakout, except the August today didn't close the best. Do you think we're going to go back up and challenge the contract highs at some point?
Boy, I would sure think so. If the cash can hold together, even just steady for a couple of weeks, I think that the June contract is going to put new highs in, just converging to where cash is. So there's a lot of bull spreading going on. I think, excuse me, that's holding back to August a little bit. The numbers are tight. I think if it weren't for the bird flu issue and those fears of what's the next story that's going to pop up and derail us, that we'd probably be north of 185 on the Junes right now. But I think it's probably inevitable as long as the cash can hold together, and maybe higher. We may have to challenge 190 if the cash firms up here over the next couple of weeks too.
Yeah, if we could just get these weights to go down too, that would help, wouldn't it?
It would. I mean, that is one thing. I think that's hurting us on the hog side too, but we're feeding them heavy for sure.
Yeah. So what do you think about, we talk about cash, we talk about, the cutouts have been screaming higher here, but that's been in the face of the packers pulling back slaughter. So do you think that is the demand still there, or is that just artificial because of what I just said about packer kill cuts?
Yeah, I think that's a little bit up in the air right now, the answer to that. It could be that it's kind of, a dog chasing its tail, that they've cut the kills and the boxes are raising, going through the roof. And that's exactly what they want. But is it backing cattle up? I don't think you see that yet. And then there's always a question of the consumer. We're essentially still at record high beef prices. We've seen a little back off in exports here. They haven't been very stellar for a couple of months. And if the consumer would back off at all, we've got some demand issues. They say the cure for high prices, Michelle.
Yeah. All right. Thanks so much. Good to talk to you as always, Chip Nellinger, Blue Reef Agri-Marketing. When we get back, we'll talk to Cary Artac and talk about chart action on several contracts: July wheat, August live cattle, and July crude oil.
If the world is your oyster, we've got pearls of wisdom on AgriTalk.
And welcome back to AgriTalk. I'm Michelle Rook in for vacationing Chip Flory. He will be back tomorrow. Here with technical action today on AgriTalk is Cary Artac with artacadvisory.com. Cary, I want to talk about July wheat. It looked like we kind of had a bearish weekly reversal last week. So did we negate that with the rally today, or what are you watching on the charts?
What I'm watching, we've got a one-year channel top. The July daily chart, there's a one-year channel top coming down. That actually held last week. And there's also a one-year channel top on the weekly continuation chart, which is not just July data. It's the stringing together of previous high-volume contracts. They're all within a cent of each other. 693.25 is this week's big number. Last week it was 695, and we tested that area. You're right, we fell away, and now we're sort of right back at it. I mean, today's high was 691.25, so we've not retested it, but it is a big pivot point through summer. And in fact, the quote-unquote summer rally that may play out this year would be indicated, at least from my perspective, if we were to close above 693.25. Now, that a couple qualifiers there. I like to see a Friday settlement above the same point Fridays have a degree of closure that the daily settlements don't have. And I also, because of the long-term line study that it is, I like to throw in a 1% margin. That's 700.25. So if on Friday we close 700 and a quarter or higher July wheat, I'm looking for about $9. There is a 3-year channel top. There's not a whole lot between 693 and a quarter and 901 half. You've got some Fibonacci levels and such, but I really think structurally this market would want to rally into the low $9 area within about 2 to 3 months. I would expect a spike in volatility, and that's pretty typical this time of year. So closing 700 and a quarter or higher on Friday, 901 half becomes my 2 to 3 month target. Until then, this is a big area of resistance where you can set hedges actually into later summer. We can fall back to 633 even over the next 2 to 3 weeks and all the way back to 590 even by July expiration. And we could potentially continue even into the 540s as we move into autumn trade as the months sort of tick by. I'm going to move on to August live cattle. Big picture with the live cattle market, 168.50, well below the market. I mean, August closed today, 178.55. So about 10 handles south, we have a 4-year speed line that represents, for me, long-term bull market support that, if tested, can contain annual selling pressures. And well above the market, I've got 188 even. That is an area that could contain buying into August expiration. And inside that wide 20-point range, I've got 176.35 that we settled above last week that I think does point toward that 188 level over the next month or two, possibly by the end of June. 188 even able to contain buying into August expiration. Downside, if we close back below 176.35, there is the possibility that over the next month or two, we fall all the way back to the 168.50 level. That is a huge pivot point for the broader live cattle market through the rest of the year, above which you can definitely say that we're in a 4-year bull market. And if we close below 168.50 in the coming months, we actually slip into a longer-term bear market. And finally, July crude oil. Once again, big picture. We came close to testing longer-term support last week. That this week is at 76.73, 76.73. You know, we're right around 79 or so at this point in time. 76.73 can contain selling through June, and above which this market could round up to 86.65 over the next few months, where we find long-term resistance. The indication for 86.65 would be a settlement this week, Friday, above 80.89. Then I'm expecting a 2 to 3 week blast up to 86.65, where we could actually top out through the rest of the year. That's a big long-term price ceiling. Now, for the downside, if we close below 76.73 at the end of the week, that slips into a longer-term bear market. Over the next 3 to 5 months, I would expect $61 a barrel, roughly, within 3 to 5 months of closing below 76.73. But right now, we're in this sort of two-sided dynamic. And we came to the base of that last week at 76.73. There is room for us to rally up to 86.65 over the next few months. Unless we close below 76.73, then we're looking for the low 60s over the next 3 to 5 months. And that's all I got, Michelle.
Oh, very interesting. All right. So if folks want more information, now they can get a 2-week trial with you. Talk a little bit about your website.
Yeah, artacadvisory.com. It's spelled, last name is ARTAC, then the word advisory, ADVISORY.com. You just go to the website. You'll see right there, 2-week trial button. You click it, name, email address, and it will give you unfettered access to everything that I produce. Does about a dozen different daily letters from corn, wheat, soybeans, all the livestock, crude oil, so forth and so on, S&P 500, even the gold market. You can take a look at for 2 weeks. And then I usually follow up with a phone call to see if you might be interested in subscribing at that point in time.
Yeah. Well, sometimes the charts will tell us something's happening before we know any fundamental reason for it, right?
I see that happen. I've been doing this for 30 years. And I can't tell you how many times I'll have a technical buy or sell signal that is longer term in scope, and I'll start speaking in that direction. And I know it defies many of the fundamentals, but it is funny how eventually the fundamentals begin to skew in that technical direction as well. I don't know why that happens, but it does happen a lot.
All right. Well, these are futures markets, right?
These are futures markets. That's correct.
All right. Well, Cary, thanks so much. Again, artacadvisory.com. Cary Artac joining us again with technical action here on AgriTalk. You have yourself a great day, Cary.
You too, Michelle. Thanks a bunch.
Appreciate it. Well, that wraps up AgriTalk. Tomorrow morning, we will have Harold Woolley on. He is president of the National Corn Growers Association, and he is a producer from Minnesota. Tomorrow afternoon, Terry Lynn of the Lynn Group will be joining us for AgriTalk PM, and Chip will be back for both. For the rest of the week, some of our guests, Randy Martinson's going to be on the PM show on Wednesday, Pete Meyer on Thursday, and Mike Miner on Friday.
Yeah, that sounds great. I'm looking at the National Weather Service Climate Prediction Center, updated May 20th. That's today, the 6 to 10 day weather outlook. Valid May 26th through the 30th. Is that right? Yeah, 4 days there. It looks like near normal temperatures across the heart of the Corn Belt. You got to get out to like Indiana or so. And then from there eastward, you're looking at above normal temperatures. It's going to be the hottest in the panhandles of Texas and then down in Florida as well. Chilly up in the PNW. The 6 to 10 day precipitation outlook. Basically, let's call it the eastern half of the United States. It gets out into the southwestern states a little bit, but we got above normal precip expected in the 6 to 10 day. For much of the U.S. Michelle, as I said earlier, thank you so much for taking some time to hop in the big chair for Chip. We appreciate you.
Yeah, thanks for having me. Appreciate it.
Absolutely. We'll be back tomorrow morning, 10:06 Central, for more AgriTalk with Chip Flory.